Okay, hello everyone. I'm gonna do this quick 5-minute, 10-minute video here. I wanted to show you guys couple of my model stocks, Cisco from 1990, and then NFLX from 2010, and we're gonna compare that to NVDA and Uber from today. A lot of similarities there, and I think the way the market is running up the right side, I'm pretty sure there's quite a bit of FOMO here, and it's pretty hard when your strategy and your style is to wait for calmness, quietness, and price action. And when you see stuff running up the right side, it's extremely hard. And I'm pretty sure, I haven't looked on my Twitter feed, but I'm pretty sure there's a lot of these screenshots of all the money that everybody else is making, and then how they're 100% invested, and then some on margin. So that kind of always happen. But I think you want to just, that's all noise. I think you want to keep that out of your sight and just focus. There's still plenty of opportunities to come. And this is why I wanted to make this video. I wanted to show Cisco and NFLX, compare them to today, and then hopefully get you to be calm and stick into your style and stick into your strategy and to your tactics. Don't get distracted by all the noise. So let's dive in, make this short and sweet. Before we get started, again, disclaimer, this is not trading advice, do your own due diligence, not recommendation to buy, hold, or sell any securities. So let's jump right into trading view here, and then let's take a look at NVIDIA. So these patterns that I'm going to compare to is really double bottom patterns base. So NVIDIA gave you one here, so that's your double bottom, and then this is kind of really your pivot, but running up the right side. What I would like to see here is this pulling back, obviously earning coming out. When is that coming out? On the 21st, tomorrow evening. Can we gap up and run from here? Sure, but it doesn't matter. You gotta wait. So what I would like to see here is a pullback down here, and then give us something to work with, and then go back up. All right. So we're looking for a pullback buy here, or if no pullback buy, potentially maybe consolidating up at the high here, and then give us something to work with from a low risk entry. So that is NVIDIA. Okay. That's your double bottom. And then you have Uber running up the right side as well. This is pretty severe, running up the right side. Not as clear of a double bottom, but let's just assume and then think it is double bottom. Okay. That's your pattern, right? Again, running up the right side. No way I would be buying this. Tons of comments on my Twitter feed, getting into Uber. No, thank you. I won't. And if it doesn't pull back, well, it will. It's just a matter of when and how far up it's gonna go before it does the pullback. So this is running up the right side as well. Okay, so remember this, and then remember NVDA, right? So that's your another double bottom here, running up the right side. So let's quickly take a look at NFLX from 2010. And then let's do the replay here so that we are looking apple to apple. Okay, so this is how NFLX was looking. Pretty much like the two stocks that we just looked at, give or take. Not exactly, but very close. And then this eventually pulled back and then gave you a pullback buy. Okay. Volume drying up, pocket pivot, 5-day pocket pivot, just classic, just like we're doing now, 13 years after, and then nothing changed, still same stuff. And that gave you the ability to get on the stock, but you needed to be patient, you needed to wait and not chase, because anyone who bought this breakout got stopped out on this pullback. Anyone that chased up here and up here and up here got stopped out. Okay, so that's Netflix. And then CSCO from 1990. That's how far we're going, and nothing changing. Okay, so 1990. This is your double bottom. So let's bring this stock up here so that we can draw the double bottom. You guys can see it. Oops, let's do that again. Here's your double bottom. Okay. And then here's your breakout from the pivot right here. And then everybody is chasing that breakout. And then you get your, I don't know, what's that, 13, 15, 17% pullback. Any trader with any kind of risk management will get stopped out. So you wait for the pullback. Let's do that replay here. Right? That's running up the right side, just like you're seeing today. And then you get your pullback. And then this is your low risk entry right here. Okay. This is volume drying out here. Give you an indication that selling stop coming to market. You got your hammer at the 21 EMA. And then you got the confirmation of the turn. And then here's your quiet candle day that you can manage risk against. What is your risk? 4% for a stock that went to become one of the greatest stocks of all, right? I think I've studied this stock. Here, we'll go back to 1990 because this is going to put us back. Let's go back to 1990. This is essentially a stock that I've studied. That's how I know, and this I remember this, and I remember Netflix. But if you look at this chart, I've kind of put this is your first pullback to the 50 MA after base breakout, high probability trade, and it gave you a beautiful pivot, and then ran up, built up a little base, gave you a cheat, tried to break out over here, stopped you out, reset, again another run at it, stops you out, and then here's when it ultimately sets up and then just goes on a run and on and on and on. So you see how I studied this stock extensively multiple times. So no need to chase. And honestly, you don't really need to chase. There is no need to chase. You gotta stick to your strategy. I mean, you guys have seen me do things live on Twitter, on my Twitter feed, right? I bought a SEN. Let's go there, right? I bought a SEN right here on Friday. Did I chase? No. No need to chase. There's still low risk entries. What is that? 2.6% stop. You want to put it down here? 4% stop. You want to put it down here? 7% stop. Valid stop, valid stop, valid stop. Stops are personal, and it depends on your trading and your personality. You can do tight, you can do loose, as long as it makes sense from a reward risk perspective. So that's one. MDB. I bought today. A bit chasing. This is breaking the downtrend and then pivot. Breaking downtrend and pivot. This is a setup that I look for. I don't buy the stock breaking the downtrend. I want them to give me a pivot after they break the downtrend. But this gave you an ability, if you bought this, gave you an ability to size up. But this was my entry. I have to say that I normally don't buy them like this. This is a little bit short and extended. But the one that I let go was PLTR. It was right here, similar setup like you saw on MDB, and this is just continued to move up. Just lots of buy in here. So this worked. Plenty of other short pivots worked. Wing is another one that was really, really, really nice short pivot right here, and volume drying up, and that also worked. So there was multiple other stocks as well. So when you see multiple stocks like that working, I was pretty okay taking the risk. But it's all about how much risk you're taking. So this worked out pretty well. But you saw I didn't chase. ARM was another one you could have taken today without chasing, right? I posted about this. Bottom, head and shoulder bottom, turned up. I didn't take this one. And then Snow was another one on my list today. It's obviously not the best quality stock. That's why it was the bottom of my list. I tweeted about that today. But it sets up a pullback buy here. Here's your uptrend. Here's your thrust up, pull back, thrust back up. You buy it here. Okay. So there's still stocks that you can find that are not extended. You just need to just be patient and put in the time to find the stocks that are not extended. I'm not going to be changing the DOL of the world, Uber of the world, or MSFTP, Microsoft, or Meta, right? I'm not. It's not going to happen. There's still stuff that sets up low risk entries that'll be taken. But anyway, I'm gonna end it. I hope that comparison between NVDA and Uber of today, and then Netflix and CSCO of the past, gives you an idea on why I do what I do, and then have the patience and the non-FOMO to chase stocks. We look pretty extended here, honestly, but that is not preventing me from taking low risk entries. MDB is one, SN is one, LLY is another. That you could have taken a shot at this one. Not as clean, but not extended. It's a stock that's been really strong that's not extended that you could have taken a shot at. So there are things you don't have to chase. Shout out to everybody that supported my work with the PDF. Obviously, there's just a selective minority of you, and I really appreciate it. It's a reflection of your determination and your seriousness about really putting in the time and the effort to improve yourself and improve your trading. I have thousands of followers, but obviously just a very select few that opt to do the PDF, and that's fine. I knew that, obviously, but I wanted to give folks something back, so that you can annotate and learn. So in the next week or two, as I said on my Twitter feed, I'm gonna do another video around low risk entries and what does that really mean, and then I'll use the same setups so that you can use that PDF and be able to continue to annotate on those same charts and add to that knowledge. And it's not about making more PDFs and asking you to support my work more. It's really about just giving you more value. So I'll use the same PDF. If you have it, great. If not, you can go back to my previous video and then get it if you're interested. Anyway, I really appreciate it, guys, and I'll talk to you soon. Stay disciplined, and I'll talk to you later.